House property is just like a gift for us. Why? Comparatively, smaller chapter, small things, only lesser things you have to study. One question definitely they will ask in exam, and you can easily score that particular thing. 89 relief, they have never asked in question, okay? So I have no plans to cover 89 relief as a part of this revision, okay? We have to complete everything, right? So I haven't picked 89 relief. So income from house property, that's what we are about to discuss right now. So listen. So section 23, determination of gross annual value. So friends, listen. When it comes to house property, let's understand how do you compute income from house property. Okay, listen. First of all, you have to compute gross annual value of a property. Are you all with me? This is the first thing that you have to compute in house property. You need to compute what? GAV. And what is GAV? Gross annual value. Then from that you can claim municipal taxes paid as what? Deduction. Municipal taxes paid as what? Deduction. Then you will get what? Net annual value. You will get what? Net annual value. From the net annual value you can claim what? Standard deduction at 30% under section 24A. Then you have interest on loan under 24B, that also you can claim. If you claim these two, the rest is said to be what? Taxable income from house property. Are you with me? Are you with me? This is the common computation format for computing income from house property. You compute the GAV first, then deduct the municipal taxes paid, then you will get the net annual value. From the net annual value you can claim 30% of NAV as standard deduction. Then you can claim interest on loan. And if you claim everything, you will get the taxable income from house property. This is how you normally compute. Now we are about to discuss, for different types of property, there are different ways of computing GAV. There are different types of properties. So for different types of property, GAV computation also differs. So in examination, if they are asking you a question, the first thing to do is identify the type of property. Are you with me? Are you with me? The first thing in examination, if you see a question, you need to identify the type of property. Now let's discuss about each and every property. Every property is there. Every property is there in one page. This is it. This is more than enough. Every property is there in one page, and we will discuss everything by making use of this chart. You can compare and study. So listen, what is the first type of property? I want a good participation from your side. Read what is the first type of property. Let out property under section 23 subsection 1. So let's compute. How do you compute the gross annual value of a let out property? What's step number 1? Compare fair rent with the municipal value and consider whichever is higher. First of all, what is fair rent? Fair rent simply means market rent. The rent that normally that you have to pay for a similar property. Are you all with me? It is the market rent is said to be the fair rent. Commercial rent we can say. Fair rent with the municipal value. What is municipal value? The local authority. Say in Chennai it will be the corporation. Okay, the corporation will have an annual value of the property. Are you all listening? The corporation will have an annual value of the property, and they charge a percentage on this annual value to as the municipal taxes. You have to pay taxes to the corporation. If it's a municipality, you have to pay taxes to the municipality. If it is a village, you have to pay the taxes to the panchayat. Are you with me? So the taxes is levied based on the percentage of your municipal value. Municipal value doesn't mean the total value of the property. It is the annual value of the property determined by the municipality. On that annual value, you have to pay a percentage as the municipal taxes. So you need to go and check how much is the municipal value. That means another annual value of the property. So compare the fair rent and municipal value and pick the higher. That is step number 1. Then what is step number 2? The above result shall be compared with the standard rent and consider whichever is lower. What is standard rent? There is a thing called Rent Control Act in India. Okay, there is an act called what? Rent Control Act in India. Have you seen that Onion movie? In Onion movie, Kalabhavan Mani is charging excessive rent from a Appavi lady. And Onion is giving some dandane, giving some notes and all to him to eat and all. Have you seen that movie? If you haven't seen that movie, don't worry. Forget about movie and focus on the topic, okay? Don't worry. So, that case, which is, I think Ambi is the one who's representing that lady in the court. That case is based on Rent Control Act, because there is an act. If a building owner is charging excessive rent from a tenant, that tenant can file a case in the court based on the Rent Control Act. Are you with me? Are you with me? So, in Rent Control Act, there will be annual rent that a person can levy from a particular property. Are you all here? In Rent Control Act, there will be an annual rent that a person can what? Charge on a particular property. Then, first you do one thing, take the fair rent, compare it with the municipal value, pick the higher. That higher have to be compared with the standard rent and pick the lower. That lower figure is said to be what? That lower figure have a name. It is called as expected rent, because income tax department is expecting minimum this much rent. Rules Ramanujam. What? Who is Rules Ramanujam? Onion movie. Ambi's character name is Ambi, right? Ramanujam. Oh, is that so? Oh, Ambi is his nickname. Okay, okay. Rules Ramanujam. Okay, I forgot. Shankar movie, right? Okay. Indian 2 is also Shankar movie. You know what? Robo 2.0 is also Shankar movie. Okay. If we start discussing about Indian 2, I'll go mad, okay? I'll jump from here. On the level panni vechirke. Okay. Because maybe, especially if you are a 90 born person, you will have that fascination towards Indian 1. It's a cult classic. We used to say it's a cult classic movie, because on the level of movie, that was so convincing. Mudiyadada, mudiyadu. I think I have conveyed it, okay? Indian 2, super. Come again? See it? See a Topper. Oh, is that a movie called See a Topper? Is that so? Oh, it's a Bollywood movie or Tamil movie? Which language it is? Come again? It's a series. It's a movie. Okay. It's a Bollywood movie? Maybe. ICA filed a petition. Why? They are degrading the CA profession. Okay. I don't know. Maybe that student is writing, failing, writing again, something like that. Okay. Why should ICA file a petition? Because there are a lot of people who are... No problem. It's a trailer. Wow. Somebody have produced a movie. Somebody have published the trailer. Somebody, ICA have filed a petition. What is our problem? Whether it is recorded or not, I haven't even seen the trailer also. ICA is going to punish me. Pathukala. Alright, listen, forget about all those things and all. So, forget about that and let's focus on the topic, okay? So, you go find out the fair rent and compare it with the municipal value and pick the higher. You compare that higher figure with the standard rent, pick the lower. That lower is said to be what, friends? Expected rent, because income tax department is expecting minimum that rent from your let out property. Now you compare that expected rent with the actual rent and consider the higher. Now you compare that expected rent with the actual rent and pick the higher. But one thing is there. However, if actual rent is lower due to vacancy, that means your tenant vacated the property. You are expecting a new tenant. The property is completely vacant and you are expecting a new tenant. Due to that vacancy factor, your actual rent came down. In that case, don't worry, then GAV shall be the actual rent itself, even if it is less. Normally, whichever is higher, either expected rent or actual rent, whichever is higher is the normal GAV. But if due to vacancy, if your actual rent is less due to vacancy factor, then don't worry, it is not your problem. Okay, don't worry, you can take the GAV as the lower actual rent itself, no problem. Are you all with me? Are you all with me? So if I ask you, how do you compute the GAV of a let out property? Start with the fair rent municipal value, pick the higher. Higher with the standard rent and pick the lower, and that is said to be the expected rent. Expected rent and actual rent have to be compared and pick the higher. If actual rent is less due to vacancy, then pick the actual rent itself as the GAV. Done. Is that clear? Is that clear? Yes, what if in the question municipal value is not given? What if the municipal value is not given? Fair rent is there, standard rent is there. Then what to do? You take the fair rent as the outcome of step number 1 because municipal value is not available. Then you take that fair rent with the standard rent and pick the lower. With the available figure, do it. Are you with me? What if standard rent is not given? Then don't do step number 2. Higher will be the expected rent. The step number 1, that higher will be the expected rent. Don't do step number 2. Don't take expected rent as 0 and compare that with the 0, and the 0 will be the lower. Don't do it mathematically, okay? So you have to always be careful with that. Now, oh my God, okay. Yeah, ERV. What is ERV? Expectant. What is an ER? Rent value. Okay, 1 lakh. Then RRV, rent. What is that RRV? Realized rent. In this case, actually I didn't get your question first of all. Expected rent is 1 lakh and rent received is 80,000. That is 90 minus 10k vacancy. No. Then you have to take expected rent because it is not less due to vacancy. It is anyways less. You got it? It have to be less due to vacancy. If it is less and there is a vacancy, no, you have to take the higher. Yes. Now, listen. Where were we? We were computing the GAV of let out property. So, fair rent, municipal value, higher. Higher with the standard rent, lower. Lower with the actual rent, higher. Now, second one, can you read the second type of property? Read it together. What is second type of property? Self-occupied property or unoccupied property. What is self-occupied property? I have a house. I am staying in my house. That house is called as self-occupied property. What is unoccupied property? I have a house in Chennai. I am staying in Delhi due to my work or business. My property in Chennai is said to be unoccupied property because nobody stays over there. Are you with me? Unoccupied property means I have a property. It is completely closed due to my job or business in some other cities. Then that property can be called as what? Unoccupied property. Now, what is the speciality? GAV of self-occupied property or unoccupied property shall be always 0. Rather than GAV, we can say NAV is 0. Why NAV is 0? Why? Because no deduction for the municipal taxes. You will not get any deduction for the municipal taxes. So imagine you have a self-occupied property. GAV is 0. Municipal taxes you will not get any deduction, and hence NAV will be 0. And there is no standard deduction because standard deduction is 30% of NAV. Now you can only claim one thing. What is that? Interest on loan. You can claim interest on loan and you can show a loss. No problem. If you have a self-occupied property with a loan, you can claim that interest on loan and you can show a loss, but it is subject to certain ceiling limits that we will study later. Is that point clear? Is that point clear? And friends, a person can show up to 2 houses as self-occupied house. No problem. If you have more than one house, then an assessee, being an individual or a chief, can treat up to 2 properties as self-occupied or unoccupied properties. No problem. Are you with me? Are you with me? What if I have 3 properties? 2 will be, any 2 at my choice will be self. And the third will be deemed let out property, and that's what we are about to discuss next. So we will directly go to the deemed let out property next. So what is deemed let out property? A person can show only 2 houses as what self-occupied properties. The third one, if you own and you are not letting it out, you are staying over there, have to be mandatorily or deemed to be a let out property. Are you with me? I have 3 houses. 2 let out, 1 self-occupied. Then 1 self-occupied, 0. 2 let out, you have to compute the GAV. I have 3 houses. Okay, 3 are self-occupied. Then what will happen? Out of 3, 2 will be self-occupied. And that 1 will be deemed let out. Which one? I have to check the higher value. Whichever have the higher value have to be self-occupied. Whichever has the most efficient manner. Whichever has the lower value have to be the deemed let out property. That you have to check in exam. We will solve a question like that. 3 properties and all. We will solve a question with different permutation and combination. Are you with me? Are you with me? Now let's understand how do you value the GAV of a deemed let out property. Can you check? An assessee owns more than 2 properties for self-occupation, then the income from any 2 such properties at the option of the assessee shall be computed under self-occupied property and their annual value will be nil. Other properties shall be treated as deemed let out property and its expected rent shall be the GAV. How do you compute? Take fair rent, municipal value higher. That higher with the standard rent lower. That is said to be expected rent. You don't have an actual rent to compare. Why? Because it is actually self-occupied. But department say it is deemed to be let out. So there won't be any actual rent. So you take that expected rent itself as the GAV. Is that clear? Is that clear? Very simple process it is. Okay. I think this is what you are saying, right? Okay. What a technology it is. Online friends, 1 second, just wait for a second. Everything gone. Online friends, just a minute. Yes, 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 yes. So let's continue. Yeah. So listen, shh. Where were we? Deemed let out property, right? So if I have three properties and three of them are self-occupied, then I can only show two properties as self. And the third one have to be deemed to be let out. And for the third one, how do you compute the GAV? How do you compute GAV for deemed let out property? Expected rent have to be the GAV because you don't have an actual rent to compare. That's what the department says. Now, that's the third type of property. Now, one is missing in between. What is that in between? House property is let out for part of the year and self-occupied for the part of the year. What is let out for part of the year and self-occupied for the part of the year? I have a property. I let that property out. Okay. I have given that particular property for rent to a tenant. The tenant vacated. The tenant what? Vacated. Soon after the vacation, I started living in that particular property. Are you with me? Are you with me? I had a property. I told my tenant to vacate. Soon after when he vacated, I started living in that particular property. Or vice versa. I was living in a property. In between a year, I moved into another property and I've given that particular property on rent. This is also possible. That is a separate property. And how do you value the gross annual value if it is that property? So can you read that heading? House property is let out for part of the year and self-occupied for the part of the year. That means some part of the year it was let out and some part of the year it was self-occupied. So what to do? ER. What is ER? Expected rent for the whole year shall be taken into account for determining the GAV. That means you take the fair rent, compare it with the municipal value and compute the higher, pick the higher. That higher have to be compared with the standard rent and pick the lower. For the whole year you have to do this, whether it is self-occupied or whether it is let out. So part of the year self-occupied, part of the year let out means don't worry, take the entire expected rent for the whole year period. And what you need to do, the expected rent for the whole year shall be compared with the actual rent for the let out period, and whichever is higher shall be adopted as the GAV. That means, listen, expected rent for the whole year and the actual rent for the let out year. You don't have to compute actual rent for the whole year because only some part of the year you have let it out. Are you with me? Repeat again. Expected rent for the, repeat. Expected rent for the whole year and actual rent for the let out year have to be compared and pick the higher as the GAV. And there is one advantage is there. What is that? Municipal tax paid for the whole year is allowed as a deduction. Normally for the self-occupied property, you will not get the deduction for the municipal taxes. Yes or no? Since department says that you have to take the expected for the whole year, you can claim the municipal taxes for the whole year as well as a deduction. Are you with me? Is that point clear? So the first thing in examination to do is identify the type of property. Okay, identify the type of property. Self-occupied 11 months, let out 1 month, same. Yes, same treatment. Yeah. So what you need to do is identify the property is the first thing to do. Then you have to compute the GAV accordingly. Are you with me? Yes, moving on to the next type of property. Can you read the next type of property? In case of house property, a portion let out and a portion self-occupied. What is portion let out and portion self-occupied? 2 floors. First floor let out, second floor self-occupied. Are you with me? Are you with me? So you have a house or a portion let out and a portion self-occupied. Then what to do? Treat it as 2 houses. That's it. Proportion, everything. Compute the value on a proportionate basis. So let's see. Income from any portion or part of property which is let out shall be computed separately under let out property category. And the other portion or part which is self-occupied shall be computed under self-occupied property category. GAV shall be computed separately based on the proportion of floor area or any other reasonable basis. So you have to consider it as a two property. Then you have to proportionate the value and compare. Are you with me? Municipal taxes for the let out portion only is allowed as deduction. For the self-occupied portion, no deduction for the municipal value. So everything have to be proportionately computed. Are you with me? Are you with me? So everything have to be proportionately computed. I hope it is clear. That proportion they will say in exams, okay? Otherwise, how will we compute? It's impossible. So that proportion, definitely they will say it in exams. So is that clear? So how many types of properties we have? We have five. This is including this. We have 5 types of property. Which are the 5 types of property? Number one, let out property. How do you find out gross annual value? Repeat. Starting with, compare it with municipal value and pick the, compare that higher with, then pick the, that lower is said to be, then compare that expected rent with, pick the, if the actual rent is less due to vacancy, then GAV shall be the actual rent. Which is the second type of property? Oh, which is the second type of property? The GAV, or we can say the NAV shall be 0. A person can show up to 2 self-occupied properties or unoccupied properties. That doesn't mean 2 self and 2 un. Altogether 2, whether it is self or unoccupied. Are you with me? Then what is the third one? A property let out for a part of the year and self-occupied for the remaining part of the year. A part of the year it is let out and remaining part of the year it is self-occupied. What to do? Very simple. You take the expected rent for the whole year and actual rent for the let out period and pick the higher. That's it. And municipal taxes for the whole year you can claim as a deduction. Is that clear? Last type, second last type, that is deemed let out property. How do you value? Deemed let out property. Expected rent shall be the GAV. And what is the last type of property? A portion let out and a portion self-occupied. Proportionate everything. Proportionate everything based on the floor area or any other reasonable basis. That's what they are saying. I hope it is clear. Is municipal tax deduction is allowed for 5th category? Proportionately, yes. Yes. Okay, moving on to the next one. There is a concept called treatment of unrealized rent. You tell me what you mean by unrealized rent? The rent, the person occupied the property, but he didn't pay me the rent. Rent is payable. Receivable for me. From the owner's perspective, it is receivable. Are you with me? Kind of outstanding, yes. So if it is receivable, then what department say? If that rent, if that circumstance satisfies this 4 condition, if that circumstance satisfies this 4 condition, don't worry. If you're satisfying this 4 condition, don't add that amount with your actual rent. Are you with me? You can treat it as unrealized rent. So the point is very simple. A person have occupied your property and he haven't paid you the rent. Now the question is whether you have to add that amount with your actual rent or not depends upon satisfaction of this 4 condition. If you're satisfying 4 condition, don't add that unrealized rent along with your actual rent. If these conditions are not satisfying, then you have to consider that unrealized rent also as a part of your actual rent. Are you with me? Are you with me? Great. So starting with the first one, what is the first condition? The tenancy should be in good faith. It should be a good faith, normal commercial agreement. That means you are expecting some rent. It shouldn't be to deceive income tax department at all. You have to make a good faith agreement. What is point number 2? The defaulting tenant has... Hello, read that second point. The defaulting tenant has vacated or steps have been taken him to compel him to vacate. What do you mean by that? Either that person who haven't paid you the rent have vacated the property, or you have to not pull the collar. You have to file a case or something. You have to take some steps to make him go out of your property. Are you with me? And the panchayatalla panna kudadu. Okay. You have to do it in a legal way. Yes. What is point number 3? Defaulting tenant is not in occupation of any other property of the assessee. That person should not occupy any other property of the assessee. If he occupies, then you may adjust the rent with the other property. And there is a possibility to deceive income tax department. Are you with me? So the defaulting tenant should not occupy in any other property of the assessee. Are you with me? Then what is the last point? The assessee has taken all the reasonable steps to institute legal proceedings for recovery of the unpaid rent, or satisfies AO that legal proceedings would be useless. What is that? Say for example a terrorist. My tenant was a terrorist. He have been captured by the military and killed. Okay. Now if I file a case against that terrorist, will I be able to recover that rent? No. So either you have to tell the AO that I have filed a case, or you should communicate to the AO that there is no point in filing a case against that particular person because he's already dead or he's already in the jail waiting for the capital punishment or something. So even if I file a case against him, nothing is gonna happen. This have to be communicated to the AO. Are you with me? If that particular circumstance satisfies all the following 4 conditions, then what is the conclusion? You don't have to add that unrealized rent with your actual rent. Without that, you compute your actual rent and compare with the expected rent and pick the higher. Is that point clear? Is that point clear?
Yes, sir.
So that is section 23 subsection 1, rule number 4 it is. Rule number 4. As per the income tax rules 1962. Okay. Yeah, if you satisfy all the 4 following condition, then what you can do? You don't have to add that portion with your actual rent. Are you with me? Are you with me? Now we will discuss about the municipal taxes. What to do with the municipal taxes? Let's understand the treatment of the municipal taxes. So can you read this box? Property taxes are allowable as deduction from gross annual value. Municipal taxes you can claim as a deduction. Now, it should be borne by the assessee. What do you mean by that? Say my tenant is paying the municipal taxes. My tenant is paying the municipal taxes. Can the building owner claim it as a deduction? Not possible. If the tenant is paying, then it is not a deduction for you. You have to suffer the municipal taxes from your pocket. Then only you can claim it as a deduction. Then, next one, it should be actually paid during the PY. What does that mean? Listen, this year I have to pay a municipal tax of 10,000 but not paid. It is payable status. Are you with me? I had to pay a municipal taxes of how much? How much? 10,000, but I haven't made any payment. Can I claim this 10,000 as a deduction by putting a payable entry? Not possible. You have to actually make the payment to claim it as a deduction. Are you with me? In year 2, what I did is like, I paid 10,000 for year 1 and 10,000 for year 2. I paid 20,000 rupees in year 2, that is 10,000 for year 1 and 10,000 for year 2. Then what to do? I can claim that entire 20,000 as a deduction. No problem. I can claim that entire 20 as a deduction. So, irrespective of the year for which it is paid, it is always allowable as a reduction on actual payment. Irrespective of the year for which it is paid, you can always claim the municipal taxes on actual payment basis. Only thing you have to check is how much you have paid. In which year? That year, the entire amount that you paid, you can claim as a deduction. Is that point clear? Is that point clear? Online friends, please respond. Are you able to follow what I'm saying? This house property is a given opportunity for everyone. It's a small topic and very easy comparatively. I'm not saying very easy, but comparatively it is easy. Now, moving on to the next one, deductions from the annual value. What are the deductions that you can claim from the gross annual value? What is the first deduction? Under section 24A, you can claim what? Standard deduction. How much is a standard deduction? 30% of net annual value is allowed as a flat deduction. What is this flat deduction? Whether you are incurring an expenditure in respect of that particular building or not, every year you can claim 30,000 as what? Deduction. Are you all with me? What if municipal taxes paid by the assessees are recovered from the tenant? You tell me, you cannot claim it as a deduction because it is not going from your pocket ultimately. Okay. Tenant pays the municipal taxes, won't they recover it from the owner? If they are recovering it, then the owner can claim it as a deduction, otherwise not. Normally it is the owner who is supposed to pay the municipal tax. But in the rental agreement, I can flip it. Say for example, this building is very wanted. Okay. The building owner is saying, KS Academy, that you have to pay the rent. Sorry, obviously you have to pay the rent. You have to pay the municipal taxes, then only I'll give this building to you. KS Academy, maybe they think that this building is like fantastic one. We have to grab this. So they will accept it. If they're accepting it, building owner cannot claim it as a deduction. It depends upon two persons. So if it is going from your pocket, being the owner, you can claim it as a deduction, otherwise not. As simple as that. Moving on. Can you read the second box? What is the second box? 1 second. Yeah. Can you read that? Standard deduction is irrespective of actual expenditure incurred. So whether you have actual expenditure or not, you can claim standard deduction. Then what is next? If NAV of the property is nil, then assessee will not be entitled to claim standard deduction. So 0 into 30% will be 0. That's it. Now, moving on to the next one. Now let me ask you one doubt. Say, I paid an insurance premium in relation to this building. I paid what? Some insurance premium in relation to this building. Or I paid ground rent. What is ground rent? In Tamil, Nella Vadagai. Okay, I think it's Nella Vadagai in Tamil. Ground rent means this land is not owned by me. I've taken this land on rent and constructed a building. Or land on lease and constructed a building. Now I have to pay the ground rent. Say, otherwise, say I paid some painting charges. Every year I'm repainting this particular building. So can I claim this insurance, ground rent and the painting expenses as a deduction? No. For everything you are getting a standard deduction 30%. Once you claim standard deduction, no other expenses you can claim as a deduction. You cannot claim any other expenses as a deduction. Are you with me? Are you with me? Standard deduction is full and final. You cannot claim any other expenses as a deduction. Sewerage tax is a municipal tax. Whatever taxes that you pay to the municipality, that is municipal tax. Sewerage tax, then water tax, then property tax. Everything is paid to the, they are saying municipal tax, not property tax. Are you with me? What is the difference between municipal tax and property tax? All the taxes together is municipal tax, like sewerage tax for your waste clearance, water tax for your water availability and supply. I think in Tamil Nadu, water is free. You only have to pay the taxes. Water is chargeable here. But people were saying water is free, they are only charging some tax. So, up to certain units it's free. Thereafter you have to pay the... Okay, whatever it is, don't worry. But some of the students only told me, the regular students in Chennai only told me that water it is free. Come again? Tap water is free. Then what water? What are the other water that you get? Rain water. So there are two types of water transport here. Only one. That is taxable. That is taxable, but there is no meter charges and all. That's what I said. You only have to pay the taxes. It is fixed or it is fixed. So you can use as much as you want. Oh, it is only fixed time. Like morning from this time to this time. Okay, forget about it. Okay, don't worry. Coming back to the point. Listen. Okay, it is taxable. Agreed. No problem. Now, moving on to the next one. Shh. Okay, it is taxable. During flood time, everywhere free. Oh, is that so, Shakti? Okay, during flood time, it is free. Rainwater, anyways, it is free. Okay. Yes. So, yeah, coming back to the point. 24B, that is interest on borrowed capital. Listen. So this is the last thing that we have to discuss before lunch. We'll complete that interest on borrowed capital. I'm sorry, and we have two more things, okay? unrealized rent subsequently recovered and treatment of co-owned property. These are the 2-3 things that we have to finish before the lunch. Thereafter, I'll leave you for lunch, okay? So, treatment of borrowed capital. Listen, say you have taken a loan for constructing or for the purchase or for the repair or for the expansion or for the reconstruction of a property. Are you all with me? You have taken a loan for either construction, purchase, repair, renovation, expansion, reconstruction, whatever may be the purpose, but it should be connected with the property. Are you all here? That interest on loan, when you are paying that interest on loan, is allowed as a deduction under 24B, subject to certain limits and conditions. Are you all here? Are you all here? Now, understand first of all, interest on loan allowed as deduction. We can split that into two. Which all are the two splits? Interest for pre-construction period and interest for the year in which construction is completed or property is acquired. So listen, what is pre-construction period? What is pre-construction period? See, today I took a loan. And I started my construction. Of my building. If today I took a loan, I have to repay the interest from next month onwards. Are you with me? I should start my repayment, or EMI payment will start from the next month beginning onwards. In the EMI, I have to pay the interest. So this year I will suffer interest, but there is no property because it is under construction. But interest is there. So what to do with that interest? Interest is there, but property is not there. So what to do with that interest? No. Can I claim it as a 24B deduction from house property head? No. Why? Because there is no property at all. First of all, you have to complete the property. If you have a property only, there will be house property head. Yes or no? So all the interest that you are incurring during the construction period is said to be pre-construction interest that you have to accumulate till your construction completely gets over. Then once your construction is over, there will be house property. Then you claim it as a deduction under 24B according to the method that we say. Are you all with me? Have you understood the logic of accumulating pre-construction interest? Because pre-construction period, there is no property. It is under construction. If you can call it as a property, then you should complete the construction. So until you complete the construction, all the interest that you are suffering have to be accumulated. Once the property is completed, you can claim that accumulated interest in a way that department say. Are you with me? Are you with me? So for this, first of all, you should understand what exactly is the pre-construction period in this. So let's understand what exactly is the pre-construction period. So interest for pre-construction period. Interest for what? Pre-construction period. First of all, let's understand what is pre-construction. Can you read the note? Pre-construction period is the period prior to the previous year in which property is acquired or construction is completed. That simply means, listen, imagine a situation where I took a loan on 1st April 2018. I took a loan on 1st April 2018. Are you with me? Are you with me? Or we will make it 2020, okay? We'll make it 2020. Now, it completed, that construction got completed today. What is today's date? The construction got completed today. Today is 23rd July 2024. Today the construction got completed. Today only I got the completion certificate from the municipality. The construction got completed today. So you tell me, today that day, that is 23rd July 2024, in which financial year? That day is in which financial year? 2024-25 financial year it is. Are you all with me? It is in the year 2024-25. So friends, listen. If it is in 24-25 financial year, then what to do? This year will be the first year of completion. This year will be considered as the year of completion. Then, when is the pre-construction period in this? From which day to which day is the pre-construction period? from 1st April 2020 till 31st March 2024 is the pre-construction period. Why? Because the year of completion of construction is always regarded as post-construction period. We can say post-construction, okay? The year of completion of construction is always regarded as a post-construction period. The year just before that will be the last pre-construction period. Are you with me? Are you with me? Now can you read this note again? Pre-construction period is period prior to the previous year in which property is acquired or construction is completed. Are you all with me? Are you? It's not months, okay. From 1st April 2024 till 31st March 2025, all the interest is post-construction period interest, okay. Yes, it is normally like that. So read this again. Pre-construction period is the period prior to the previous year in which property is acquired or construction is completed. Now what to do with the pre-construction period interest? What to do with the pre-construction period interest? Accumulate everything and claim the total interest in the pre-construction period shall be claimed in 5 equal installments from the year of completion of construction. Are you with me? Are you with me?
Yes, sir.
Online friends, am I audible? Is there any problem with my voice? Please respond. Am I audible? Is there any problem with my voice? All good. All clear, right? Good, good, good. Now, moving on. So, pre-construction period is the period prior to the previous year in which property is acquired or construction is completed. And there is a note under that. Can you read this note? Pre-construction period starts with the date of launch, ends with 31st March of the PY prior to the PY in which such property is acquired or construction is completed. Are you with me? Now, friends, listen. So, what you need to do is, what is post-construction? Interest for the year in which construction is completed or property is acquired is said to be the post-construction period. And what to do with the post-construction interest? Interest relating to the year of completion of construction or acquisition of the property can be fully claimed in that year. That means for the 24-25 whole interest you can claim as a deduction in that year itself. Are you with me? Are you with me? We will take some figures for a better understanding of this. So listen. Say for example, I took a loan of 10 lakh rupees. And I took this loan on 1st April 2021. Okay, I took the loan on 1st April 2021 and the interest is at 10%. Interest is how much? 10%. My construction got completed. My construction got completed on today, 23rd July 2024 is the completion date. Forget about principal repayment. Assume that there is no principal repayment for that particular loan. The principal is still 10 lakh. It's nothing repaid till now. Are you with me? So you tell me from which date to which date is the pre-construction period? Pre-construction period is from which day to which day? From 1st April 21 to 31st March 24 is the pre-construction period. Are you with me? So 1st April 2021 to 31st March 2024, how much will be the interest? 10 lakh into 10% for a year. So 21, 22, 23, 24. You have 3 years. Are you with me? 22, 23, 24. You have 3 years. So into 3 years. How much will be my total interest? 3 lakhs will be my total interest. What to do with this 3 lakh? I have to accumulate. I have to accumulate. And I have to claim it as a deduction in 5 equal annual installment from the year of completion onwards. Which is the year of completion? 24, 25 is the year of completion. Are you with me? In 24-25, there will be two set of deductions. Number one for the current year interest. There will be current year interest because the loan is still pending. So that will be 1 lakh. Are you with me? Why it become 1 lakh? 10 lakh into 10%. And how about the pre-construction period interest? 3 lakh divided by 5. That will be 60,000 also will be there. So all together I can claim 1,60,000 rupees as a deduction in the year of completion according to this example. Are you all with me? Are you all with me? This is how you have to claim a deduction under 24B if there is pre-construction period interest. I hope it is clear for you. Have you understood? I think all of you got an idea. You were asking doubts in relation to this. So I think all of you got an idea. If it is completed on 23rd March, pre-construction period ends on? Yes. Yes. 2023 March itself. Yes. That's right. Moving on. Moving on with the next one. What is next, friends? So now imagine a case where, one second, friends. All right, listen. Say for example, for let out property, there is absolutely no restriction for what? Interest rate. How much ever is your actual interest, you can claim that particular interest as a deduction. For let out property, deemed let out property, and a property where part of the year self-occupied and part of the year let out and all does not have any restriction for the interest. But if your property is a self-occupied property or a portion of a property is self-occupied, then there is a ceiling limit. Then only there is a ceiling limit. Why there is a ceiling limit? Why? Because we are not charging any income from that particular self-occupied property. So we are not allowing you to claim all the interest as a deduction as well. We are restricting your deduction. Fair enough. Are you with me? Since we are not charging any income from that respective property, we will restrict your interest deduction as well. We will put some ceiling limits for that. Are you all with me? Yes, are you all with me? Yes, now let's understand what exactly is that particular ceiling limit. So what is this heading? Can you read the heading? Deduction in respect of self-occupied property where annual value is nil. If the annual value is nil, means self-occupied property net annual value is nil. There is a ceiling limit for the deduction of interest that you can claim, and let's understand how much is the ceiling limit. So what is the first one? Can you read the first yellow box? Loan borrowed before 1st April 1999. So you took a loan. You took a loan before 1st April 99. You have taken the loan before 99 April. Then what will happen? Maximum deduction shall be, the deduction shall be actual interest payable for 1 or 2 self-occupied properties subjected to maximum of 30,000. So it always subjected to the actual. If your actual is less than 30, then you will only get actual. If the actual is more than 30, you will get only 30. Are you with me? What is actual? What do you mean by actual? Actual interest. Are you all with me? You have taken a loan before 1st April 1999 and you are suffering some interest. How much is the maximum deduction for the interest? Maximum deduction shall be 30,000. Now let me ask you one question. How many properties you can maintain as self-occupied property? 2 properties. I have 2 properties. For both of them, I have taken a loan before 1st April 1999. For both the properties, I took a loan. And both the loans were before 1st April 1999. Can I claim 30,000 per property, or is it a combined threshold? Combined threshold. For both the property together, I can claim maximum 30,000. Are you with me? And that also subjected to actual. Are you all with me? Now there is one more thing. Yeah, what happened? Is there any problem? Come again? From outside. Now, listen. Say, as you all know, when you claim a year's deduction, there will be 1/5 of the pre-construction period and current year interest. Everything together maximum 30. In whatever permutation combination it comes. If the loan is before 1st April 1999, in no permutation combination you are allowed to claim more than 30. In no permutation combination you cannot, or we can say you cannot claim more than 30. Are you with me? Are you with me? That is the first box out of it. Now, what is the second box? Can you read the second one? Loan borrowed on or after 1st April 1999 for construction or acquisition of house property, and the same is completed within 5 years from the end of the financial year in which capital was borrowed. Listen, you have taken a loan when on or after 1st April 1999. Say today. Today is after 1st April 1999. So today I have taken a loan. What is the purpose of loan? That is very important. What is the purpose of loan? Either for construction or for acquisition. Acquisition means purchase. Either for constructing a property or for purchasing a property. And one condition is there. If you are constructing the property, then it should be completed within 5 years from the end of the financial year in which the capital was borrowed. Imagine I took a loan today. I took a loan today. What is today's date? 23/7/2024. I took a loan today. You tell me which is the financial year in which I took the loan. This date comes in between which financial year? 2024-25. When is the last day of the financial year? When is the last day of this financial year? 31st March 2025. Last day of this financial year will be 31st March 2025. From that day, I have to complete my construction within 5 years. So within 5 years means when? That is 26, 27, 28, 29, 30. That means I have to complete the construction before 31st March 2030. Are you with me? Read this again. Loan borrowed on or after 1st April 1999 for construction or acquisition of the house property, and the same is completed within 5 years from the end of the financial year in which capital was borrowed. I borrowed the capital today. This is 24-25 financial year. From the end of this financial year means 31st March 2025. From that I have to complete the construction within another 5 years means 31st March 2030. I should complete the construction. Then only I can claim a deduction up to 2 lakh. Then only I can claim a deduction of up to how much? Up to how much? 2 lakhs. For claiming 2 lakh deduction, this is mandatory. First one, I have to take a loan after or on 1st April 1999. And the purpose of loan should be construction or purchase. Say for reconstruction or repair, I have taken a loan. For expansion or repair, I have taken a loan. Can I claim deduction up to 2 lakh? No, no, no. That's why I have highlighted that. It should be either for the construction or purchase. In the case of construction, I should complete the construction within that 5-year time allotted. Are you with me? If everything is okay, then you can claim a deduction of up to 2 lakh. And imagine, I have 2 properties. I have what? 2 self-occupied properties. Both I took a loan after 1st April 1999. One is for construction and other is for purchase. All the conditions are satisfied. Can I claim 2 lakh per property or combined threshold 2 lakh? Combined. Maximum I can claim only 2 lakh. Are you with me? Maximum I can claim only what? 2 lakh. Now, moving on to the third case. And there is one more thing. When you claim that 2 lakh, it is the maximum of both 1/5 of the pre as well as the current year interest. All together you can claim maximum 2. It is not current year alone. Come again? முடியாது. Property ஒன்று தானே இருக்கு. So you have 2 self-occupied properties. Oh. ஆமா, பரவாயில்லை. கிடைக்காது. 2 lakh தான் கிடைக்கும். That's what I said. I have 2 properties, 2 loans. All together 2 lakh. Maximum combined threshold 2 lakh. It's not per property. For a person 2 lakh. Not for the loan, not for the property. Purjada? Great. So that's what we were saying. So deduction shall be actual interest payable for one or two self-occupied properties subject to maximum 2 lakh. That is one or two. Maximum 2, not per property. Maximum 2. Aplota kadakku. Now, the limit of 2 lakh shall be after including 1/5 of the pre-construction interest. The 2 lakh have to be determined after adding the pre as well as the post. Maximum 2. Are you with me? Are you with me? Now, moving on to the third scenario. You took a loan after 1st April 1999, but what is the purpose? Either repair or renovation or construction of the house property, but it is not completed within 5 years. Then how much is the maximum deduction? How much is the maximum deduction? You can claim only 30,000, including 1 or 2. Maximum combined threshold 30,000. Are you with me? Now let me create a scenario. Say, I have a property, I have a house where I took a loan before 1999. Say I took a loan on 1990. I took a loan on how? When? 1990. And current year interest is, say, 40,000. Current year interest is how much? 40,000. I have another house. I took a loan after that. I took a loan on 2021. I took a loan on 2021 and it is for purchase. And it is for what? Purchase. Then current year interest is for that property is say 2,40,000. Not 2,40,000, I will take another figure. 2,80,000. Okay. Current year, okay. Yeah. So current year interest is how much, friends? What is this? Now, how much is the current year interest, friends? Current year interest, 2,80,000 in the second case. In the first case, when you compute the deduction, how much is the maximum deduction? Gone again? 1 second, friend. Yeah, for the first loan, for the first house, how much is my maximum deduction? How much is my maximum deduction? I can claim only 30,000. For the second house, how much is my maximum deduction? I can claim only 2 lakh. But there is another problem coming. What is another problem? I have two self-occupied properties. One have a limit of 30 and the other have a limit of 2 lakh. Both of them, maximum I can claim 2 lakh. Not more than that. I cannot claim 2 lakh 30. Altogether, I can claim only 2 lakh. Are you with me? Are you with me? If instead of purchase, say I took a loan for repair and the interest is 2,80,000, then how much is my maximum deduction? 30,000 is my maximum deduction. Then you tell me how much is the maximum altogether? Not 60, only 30. Highest of the limits. If both the limits are 30, altogether 30. If both are 2, altogether 2. If one is 30 and another is 2, altogether 2. Have you understood? Have you understood? Point, I'll repeat again. If both are 30, altogether 30. If both are 2, altogether 2. If one is 30 and the other is 2, altogether 2, not more than that. Yes. Yes, co-owned property, 2-2 or 30-30. We are about to discuss that. Co-owned property. That's why everybody is recommending joint ownership. Provided you should not expect any divorce and all in future, okay? I hope you understood what I mean. Co-owned property, there is another treatment that we will study. I mean, depends, okay? That we will study maybe before the break or after the break, don't worry. Yeah. So have you understood this much? Have you understood this much? Yes. Clubbing provision, no. No. Even if there is clubbing provision, computation happens in the name of the other person. Then only the net income will be clubbed. Understood? Clubbing provision and this may come together, but in the clubbing provision, it's very clear that that person hand you have to compute everything. Then only that net portion have to be clubbed. So even if there is clubbing, you can claim separate 2 lakh. Yes. No, 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 no. Unexhausted portion and all, there is no carry forward. You cannot carry forward it. Gone. This is actually year one. Anyways, your actual interest will be more than, I mean, in Chennai, I think to buy a property, you have to pay minimum 1 CR maybe, right? I don't know. 1 CR. I mean, with 1 CR, will you get a property in Chennai? Depends upon the area. Chennai city limits will be very expensive, right? T Nagar. This is, what is the place name? Kodambakkam. And where is Nungambakkam? I know, I visited Nungambakkam a lot of times for my CPA. High rate, very expensive. Due to ICA? No. Yeah. So, listen friends. Shh. Listen. Where were we? We were discussing about the combined thresholds. I hope it is clear for you. Yes. Completed construction. Okay, I think this is the old one. Loan 1995, completed 1997, PY 2023. If you don't give a pre-construction interest. No, how can we pay? No, no, no. There won't be any pre-construction interest in that case. 31st March 2030, 30 deduction. Okay, in case 30, 30, 30. Both case with what is WEH? Whether, whichever is higher, that are, whichever is higher. No, no, no. Like this. Property rates at Nungambakkam and Nagar, Alvarpet and all too costly. Maybe. Chennai is a metro city, so of course, they can justify the cost. No problem. Yeah. So friends, that's what we were about discussing. And can you read this note? Total interest deduction as above shall not exceed 2 lakh in any case. Whatever be the permutation combination, it shall never exceed 2 lakh. When it comes 2 lakh, either 22 or 32. Are you with me? Now, there is one note under this. Can you read the note? The ceiling prescribed for the self-occupied property as above does not apply to let out or deemed let out property. So let out and deemed let out property, the ceiling limit is not applicable. Then deduction for interest is available on accrual basis. It is not like municipal taxes. If it is payable also, you can claim the deduction. And what is the third one? Where a buyer enters into an agreement with the seller to pay sales price in installment along with interest, it also shall be considered as a loan. So you are paying with interest to the buyer in installment. No problem. That interest also you can claim as a deduction. Now, note number 1. Interest on unpaid interest is not deductible under 24. We call it as penal interest. Have you heard about penal interest? There is some overdue and bank is charging interest on interest. Not deductible. You cannot claim that as a deduction. Come again? Compounded, yeah, it's a kind of a, normally we say penal interest. You haven't paid the EMI on time, there will be interest on interest. That you cannot claim as a deduction under 24. Then, note 2, for claiming deduction up to 2 lakh, as above, assessee should furnish a certificate from the lender, specifying the amount of interest payable. If the certificate is not produced, deduction shall be restricted to 30. You should prove that. Okay, you should have to submit a interest certificate from the bank, then only you will get a deduction of up to 2 lakh. Otherwise, they will restrict it up to 30. Yes. So we'll do one thing. Oh, it's only 1:15. So I will take 10 more minutes and finish this off. Okay. I'll take 10 more minutes and finish this off. Otherwise, we have only not 10 more minutes. 5 minutes is enough. Okay. 5 minutes is enough to finish. Listen. Section 25A, provision for arrears of rent and unrealized rent received subsequently. Imagine a situation. Say my tenant occupied my property. Shh, listen. Imagine a situation where a tenant occupied my property for 4 months. Then all of a sudden he absconded. I searched for him, he escaped. Okay, he went to some other cities. So all the 4 conditions have been satisfied also. So I consider that 4 months rent as what? Unrealized rent. A tenant occupied my property, then he left without paying the rent. So I considered that 4 months rent as what? Unrealized rent. Are you all listening? So 4 months rent we have, and that 4 months rent is now unrealized rent. Now, after some time, he came back. After some years, he came back and he repaid he went to some saint or something, or Guruji or something. That Guruji said, you have 4 months rent pending that you have to pay today, otherwise you will not get moksham. So he thought of getting moksham and he came back and paid that 4 months rent back to me. Are you with me? Yeah. Now what shall I do with the 4 months rent? In the year of subsequent receipt, that 4 months have to be treated as not my rental income. It is treated as subsequent recovery of arrear or unrealized rent. Then from that 4 months rent, I can claim what? 30% standard deduction. The rest shall be fully taxable under the head house property. Are you with me? And there is one interesting fact is there. That have to be taxed under house property whether or not I own that particular property in the year of receipt. Say for example, see, last year my tenant escaped. Last year my tenant escaped and he is supposed to pay me 4 months rent. Are you with me? This year he came back. But this year beginning I sold my house property. This year beginning I sold my house property. Are you with me? Are you with me? This year beginning I sold my house property. Now this year beginning he came back and he paid, or this year today he came back and paid me 4 months rent. So when I am getting this 4 months rent, I don't own a property. Do I am the owner of the property? Do I own a property today? No. But still I have to show it as an income under house property and I can claim 30% standard deduction. Are you with me? Are you with me? Very simple. So one property is 30 and another property is around 160. Then yes, 190 you can claim. 190 you can claim. Altogether up to 2. Okay. Will it not be taxed under IFOS? No. That's what I said. It have to be assessed under house property even if assessee is not the owner of the property. Okay. It is like that. Now treatment of co-owned property. In one sentence we can finish it off. Listen. Say I have a flat. Are you all listening? Yes. Are you all listening? Yes, sir. Thank you, sir. Now only got the chart PDF. Okay. Today morning I think I have increased my degree of what do you say? Hope you understood. Okay. I become a little bit aggressive today morning. So maybe I think it's my mistake. Yesterday morning itself, if I was so aggressive, then you could have got everything on yesterday itself. Okay. So yeah. Don't worry. And please pardon for the delay, okay? Yes. And where were we? We were discussing about the co-owned property, okay? I was about to say something, I forgot. Don't laugh, this will come to you after you qualify, okay? And you will never remember names. I have a problem of remembering names. I don't remember names. I don't remember facts. I remember dates. I remember everything. I don't remember anything, okay? I don't remember names. I don't remember facts. I always forgot. Forget. Even I forgot once, soon after marriage, one of my relatives came to me and we met in a mall. My wife was with me, okay? And they asked her name. I forgot her name. I forgot her name. Damn. I know, but it is not coming. I was like this for 5 minutes. My wife started staring, what? Then I got it, okay? Otherwise, I won't be here. Otherwise, I would have died at that moment itself, okay? Somehow I have escaped. So this problem will come to you, especially on July and October. July and October, you will not remember anything. Okay, even you will forget the place where you stay also. Yes, it is like that. Certain morning when I get up, I still think that I am in Coimbatore. Okay, it is like that. These kinds of syndrome will come to you. After this due dates and all, my God, then it's a kind of another life we have. Okay, but that life, normally you don't enjoy. Because during that, from that busy period, if there is nothing to do in the evenings, then you will get bored. Okay, and you don't have Sunday, you don't have Saturday, you don't have public holidays. You have your own holidays. The best thing to do, switch off your mobile phone on holiday. Otherwise, it won't be a holiday. Okay, once you qualify, it's always to switch off the mobile phone. If you want to enjoy the holiday, switch it off. Whatever happens, switch it off. That's it. So, what to do? Yeah. So coming back to the point. Yes. Say I have a property, okay. I have a property and it is co-owned. Ennada? Come again? யாரடா அது சாட்ல என்ன போட்டிருக்கு petition to take ஆவேசம் 2 with JK sir as hero. Even I will forget my name, okay. When me sir, I don't remember faces of people. I can only remember if I meet them for 5-7 times. I think everybody is like that, right? Yeah. Rangachetan, okay, you make me Rangachetan. All right. So listen, say I have a property and it is co-owned. I am the owner and my wife is the co-owner. Are you all with me? Then the greatest advantage of it is, if it is a self-occupied property, I can claim up to 2 and my wife can claim up to 2. It is always per person. That ceiling limit of 2 lakh or 30,000 is per person. If my actual interest is say 4 lakh on one property, this is my property. I took a loan on this property and I'm eligible to claim up to 4. 2 for me and 2 for my wife if we are equal owners. Is that clear? Is that clear? Yes, I hope you understood. I mean, you were asking a doubt. I hope you understood it, right? So if it is let out, then there is no advantage. Anyways, I can claim the entire interest as a deduction. If it is a self-occupied, then there is a real advantage because you can claim 2, your wife also can claim 2. Or you can claim 30, your wife also can 30. Depends upon the type of interest and type of property it is. Is that clear? Is that clear? Superb. So we'll do one thing. Now we will go for a break. So go enjoy your break and come back at 2:30. Okay, 5 minutes extra. If the construction is not completed within 5 years, then maximum 30. Maximum 30. Some example, that's what I've told you. Say the interest is total 4 lakh for one property. It's co-owned by me with my wife. Even though the total interest is 4 lakh, out of that 4, I can claim 2 and my wife can claim another 2. Got it? Ragul, I hope you got it. I can claim up to 2 and my wife also can claim up to 2. So altogether we can claim together 4. In let out property, no limit for interest borrowed. No limit. It's one the advantage, yes. This is advantages. That's why most of the people are preferring co-ownership. Yes. So go relax and come back at 2:30, okay? I took a loan for me 2 lakh limit, for my wife 2 lakh limit. Is my wife's salary clubbed with me? Yes. Even if it is clubbed, you can claim 2 lakh separately because only the net income will be clubbed. The computation have to happen with your wife. And after adjusting and deducting everything, the net income will get clubbed. It is like that. Yes. You don't have to club the gross income and claim the deduction. The net income will get clubbed. Yeah. So shall we solve some questions? Shall we solve some questions? All right. So you want easy question or a tough question? We only have tough questions, okay? So tough alla illa aanalum paravalla. So we have one question pending in salary, okay? So let's finish that question first, friends. So can you please go through question number 5 and give me the answer? Idu vandu May 23. What's the weightage? Arey, what is the weightage? 7 marks, May 23. Salary head question, okay? Just go through this. So shall we do it together? How many of you have an answer? Please raise your hands. Excellent. So pass this question, May 23, 7 marks. Okay, so we will solve it together. Yes, online friends, very good. A lot of you are giving me answers. Excellent. Very good. Superb, superb. So, Mr. Rohan retired from QR, some private sector company, on 31st March 2024 after completing 28 years and 3 months of service. He received the following sums or gifts on his retirement. Okay. Gratuity 7,50,000. He had been covered under payment of the Gratuities Act. Then leave encashment is there. Crockery set he got. He drew a basic salary of 25,000 per month along with 50% basic salary as dearness allowance, not forming part of the retirement benefit, for the period from 1st April 23 to 31st March 2024. During the year, his employer provided him with a motor car of 1800 cc, which was used by him and his family solely for personal purpose. The cost of fuel and repairs were met by Mr. Mohan itself, and the car was purchased by the employer on 1st April 2022 at a cost of 8 lakh. The salary of driver amounting to 10,000 per month was met by the employer only. Okay. So upon retirement, he gave the car back to the employer. You are required to compute the taxable salary of assuming that he neither claims any relief nor does not opt for 115 BAC. So let's compute it together. So we will start with the basic salary first of all. So the same format that we have used earlier, okay. And how much is the basic salary? Basic salary, let's compute the basic salary. So the question says he was drawing a basic salary of 25,000 along with the DA of 50% of basic salary for a period from April to March 2024. Then he got retired when? On 31st March only he got retired. So for the whole year, he was actually working, and on the last day he got retired. So 12 months basic salary means 25 lakhs into 12 months. How much is the sum? 25,000 into 12, it will be how much, friends? 3 lakhs. Now dearness allowance is 50% of the basic salary. That will be 1,50,000. Right. And it does not form part of the retirement benefit. Okay. Now, what is next? So, we will do one thing. We have started with this paragraph, and this paragraph is over. Now, we will deal with the other items here. Okay. We will start with the gratuity now. Gratuity of 7,50,000, he was covered under payment of Gratuities Act. So, it is on account of retirement, and hence you can claim exemption. And let's compute the exemption. Okay. So, gratuity. How much is the original gratuity or actual gratuity limit? Actual gratuity received 7,50,000, and you can claim an exemption. And can you tell me how much is the exemption? He's covered under payment of Gratuities Act. So the first limit is 20 lakh or actual gratuity received of 7,50,000 or 15 by 26 into last drawn salary. And last drawn salary will be how much? 25,000 plus 12,500. So 25,000 plus 12,500 into completed year of service. 28. And can you help me with the computation? 6 lakh 5,000. 770, 769, both are fine. No problem. I'll take round of figure. 770. Both are fine. 769 or 770, whatever you write, no problem. Whichever is lower. 770. Can you help me with the math? 230. You can write 231 also, depends upon the amount that you have taken. Now, what is next? Gratuity is done. Leave encashment of 3,25,000 for 210 days leave balance in his account. He was credited with 30 days leave for every, okay, 1 second friends. He has been credited with 30 days leave for every completed year. So it's perfect. 30 days correctly for every completed year. So we'll do one thing, we will compute the leave travel concession. First of all, let's write the leave travel concession down. So how much is the leave not leave travel concession, sorry, leave encashment. Leave encashment, how much is the amount? 3 lakh? 3,25,000 is the total amount. Now, from that you can deduct what? The exemption. And how much is the exemption? For that we will write a separate working note, okay? How much is the exemption, friends? List of the following. What is the first one? First limit? 25 lakh is the first limit. And what is number 2? Actual leave encashment received, that is 3,25,000. And what is number 3? Last 10 months standard salary. Here it is only basic salary. Why? DA does not form part of the retirement benefit. So last 10 months basic salary, it will be 2,50,000 because last drawn basic salary is 25,000 into 10 will be 2,50,000. Now what is the last limit? Cash equivalent of leave. How many leaves he have? How many leaves he had? 210 by 30 into 25,000 into no, you don't have to take a number of years, okay? Only cash equivalent of leave. How much is that? 1 lakh? Come again? 1,75,000. Oh, the 1,75,000 round figure. Okay. Now, can you help me whichever is lower? 1,75,000. So 175 if you deduct, can you help me? How much will be? 1,50,000 will be the taxable amount out of it. Moving on with the next one. What is next? We have a crockery set worth 4,500 from his employer at a favorable party which was organized by the HR department a day before his retirement. Fully exempted because it is less than 5,000. So nothing, there is no point of any confusion. Now, further, during the year, his employer provided him a motor car of 1.8 liters, that is 1,800 cc, which was used by him. Provided a car means car owned by the employer and used by the employee for personal purpose only. So, dual benefit. And how about the maintenance and running? Cost of fuel and repair were met by Mr. Rohan. Mr. Rohan is the employee. So, not dual benefit, only the ownership. The car was purchased by the employer at a cost of 8 lakh and salary of driver amounting to 10,000 per month was made by the employer only. So, ownership is there, driver salary also will come. Are you with me? Are you with me? So let's value the perquisite. So valuation of perquisite. Value of car. First of all, ownership. How much is that? 8 lakh. Into 10% for the whole year. How much is that? 80,000. Now driver salary. Driver salary is, how much is the driver salary? 10,000 per month into 12 months, right? 10,000 into 12 will be 1,20,000. So you tell me how much is the total value? 2 lakh. Now, what's next? What is next? Salary amount we have done. Upon retirement, he gave that car back to the employer. I think this is it, right? This is such an easy question because we have done a question which is more lengthier than this. Okay, so this is like 7-mark question is nothing. So can you help me with the gross salary? Only this much, okay. Gross salary, can you tell me the gross salary? 9 lakh? 44,000? 230. From that you can deduct STD, standard deduction. How much is standard deduction? Come again, motor? Transfer of motor vehicle. Why? Return back means what? He have given back. Yes. So can you help me with the taxable income? 894. Then mobile number. 230. Yes. No. You don't have to use it because it is exclusively used for personal purpose. No statutory figures will come. Okay, Ashwin, it's exclusively used for personal purpose, so statutory figures will not come. Refer the chart. Come again? Value of car. The total cost of the car is 8 lakh, right? For a year, 10%. Yes. Driver salary is it should be incurred by the employee. but sponsored by the employer. So that also will become his taxable perquisite. 900 and? Why? Because that will only come if it is mixed usage, personal as well as official. The question itself says that what? It is exclusively used by them. He as a family, used by him and his family solely for personal purpose. So why should you take statutory values? You don't have to take statutory values. Got it? Why? Because employer have paid it. That is also a running charge. Running and maintenance means fuel, repair, driver salary also is a running expense. Out of that, repair and fuel met by him only, but driver salary met by the employer. So driver salary of 10,000 into 12 plus ownership of 8 lakh into 10% will be the taxable perquisite. Got it? Confused with the leave encashment for last calculation day. Visit the, check the chart. Last calculation is cash equivalent of leave at the credit of employer. That means how many leaves you have? 210 leaves they had. Divided by 30 into last drawn standard salary based on last 10 months average. Here there is no change in the salary. And the standard salary is only the basic salary. Why? Because DA does not form part of the retirement benefit. And hence it become 25,000. You got it? Santiga. How do you spell it? Santiga. What if the car is used only for official? Nothing taxable. Yes. So shall we solve another problem? Yes. So it is related to fantastic question it is. Okay. This is one of my favorite questions. Question 6. RTP November 2020. House property. Yeah. So shall we do it together? All right. Listen. Miss Pihu has 3 houses, all of which are self-occupied. The particulars of these houses are given below. Municipal valuation is there, fair rent is there, standard is there. Date of completion is given. Municipal taxes payable during the year paid for house 2 and 3 only. Okay. So house 1 they haven't paid any municipal taxes. They paid only for 2 and 3. Interest on money borrowed for repair is given 75,000. You are required to compute Pihu's income from house property for assessment year 24-25 and suggest which houses should be opted by Pihu to be assessed as self-occupied so that her tax liability is minimum. So let's see. To solve such question, normally we use a method. Okay, I'll teach you what exactly is this method. Listen. Shh. First of all, the method that I am about to take, first of all, we compute the gross annual value of all the property. Okay, the first thing to do in similar question in exam is compute the GAV of all the property, assuming it is a deemed let out. Then you need to compare. Then you can quickly compare it in option 1 and option 2 and option 3 without burning your head much. Are you with me? So what we are doing is, say, computation of GAV. We'll take house 1, house 2, house 3. Tell me, in house 1, municipal value is there, fair rent is there. Whichever is higher, that means municipal value. Compare it with the standard rent and whichever is lower. So 1 lakh will be the gross annual value if it is a deemed let out property. Yes or no? In case of house 1, 1 lakh will be the gross annual value. So GAV for house 1 will be 1 lakh. How about house 2? Municipal value fair and higher means 185. With the standard rent 190, lower means 185. So 185 will be the GAV in house property 2. How about house property 3? Municipal value and fair rent have to be compared and pick the higher, and that with the standard rent and pick the lower. That will be 1,30,000. 1,30,000. Now, We will consider municipal taxes paid. For house 1, there is nothing paid. For house 2, 9% only they are saying. 9% of what? Municipal value. So 9% of 1,20,000. So 9% into 1.20 lakh. How much is the sum? 10,800. Then third case, 1,20,000 into 10%. That will be 12,000. And how much will be the net annual value? First case, 1 lakh itself. Second case, come again, 1 lakh? 74,200. And third case, 18,000. So in first case, why we haven't deducted municipal tax? Because it says that only for 2 and 3 only they have paid. That means 1 they haven't paid. Now we will deduct the standard deduction as well. Can you help me in standard deduction? First case, 30,000. Second case, 50,000. 52,260. Is that so? Third case, 34,000. 35,400. Now, before deducting the interest, don't deduct the interest because the type of property, if it differs, interest also differs. So, we are computing a value called as NAV minus standard deduction. How much is NAV minus standard deduction? First case it is 70,000. Second case, 1,41,021. Okay, 1,21,940. Third case, 82,600. Let it be there. Now we will compare different options. Okay. Now based on this chart, we will compare different options and we will complete the answer. Now option 1, say option 1, I am taking house 1 and house 2 as self-occupied. And we will consider house 3 as deemed let out. And we will compare. Okay. So house 1 and house 2 self-occupied means our NAV minus standard deduction figure will be nil. Yes or no? Now house 3, it will be 82,600. Okay, wait. Okay, tenid, you wait. Okay, that's what I'm about to do. Okay, just wait. Now, how about interest on loan? What to do with the interest on loan? House 1, we don't have any interest on loan. House 2 in this option is self-occupied property and the interest is actually taken for repair of the property. So you tell me how much is the maximum deduction? 30,000 is the maximum deduction, and case 3 there is no deduction. So this will be 30,000 loss. It is 82,600 profit, and the first case nothing. So can you net off and tell me how much is the income? 52,600 is the income from property. Are you with me? So if you go for option 1, income from property will be 52,600. Now we will check option 2. Option 2. What is option 2? We will take another option, that is house property 1 and house property 3 self-occupied. And I am considering house property 2 as deemed let out. Now, can you help me with the computation? If house property 1 and house property 2, if it is self-occupied, house property 3 if it is self-occupied, then NAV minus standard deduction will be how much in 1 and 3? That we have already computed. 1 it will be 0, 3 it will be 0. Then how about 2? 121,940. 121,940. Now friends, from this we will deduct the interest. House 1 no interest. House 3 no interest. House 2 you can deduct that entire 75,000. Why? Because for let out, deemed let out property, there is no ceiling limit for the interest. Are you with me? Now can you tell me how much is the figures? 1 nil, and this will be 940. So this is the income in option number 2. Now we will think about option number 3. So option 3, We will say house property 2 and house property 3 as self-occupied, okay? And house property 1 will be deemed let out. Based on this, we will solve. Now, can you help me with the NAV minus standard deduction of 2 and 3 will be nil. And how about 1? 70,000. Now, interest on loan in house property 2 is how much? You can claim up to 30,000 since it is repair and self-occupied. You can claim up to 30. House property 3 nil, house property 1 nil. Can you tell me how much will be the impact? First case loss 30,000. Second case nil. Third case income 70,000. Can you net it off and tell me how much will be the income? Come again? 40,000. Now you tell me which is the best option. In our computation, option 3 will be better because option 1 50 to 600. Option 2 46,940. Option 3 40,000. Yes, third option is better. So the conclusion will be house property 2 and house property 3 self-occupied and house property 1 deemed let out. That should be the final answer. Yeah. This is option 1. House option 1. Hope everybody understood. Online friends, please respond. Have you understood? It's a kind of good question. Okay? Yes. Yep. And we'll do something innovative. Okay? Rather than sticking on to one head, now we will mix up 2 heads. Read question number 7 and give me the answer. It's a fantastic question. It's May 19, 8 marks. Okay. May 2019, 8 mark question it is. And there is some problem in this question. Means one sentence is there. That is in the next page. Okay. So, determine taxable income of Madhavan for assessment year 24-25. All working should form part of your answer. There is nothing substantial in that page. Okay. So, it is a 8 mark question, May 19. So, please solve it together. I mean, first you solve it by yourself, then we will solve it together, okay? It looks like a very tricky question, okay? But let me tell you, if you properly read and understand the question, then there is nothing. Listen. Shh. Now keep quiet and listen. Mr. Madhavan is a finance manager in Star Private Limited. He gets a salary of 30,000 per month. So he has some salary income. So we will straight away start writing the sum, okay? So salary is there, salary head is there, and how much is the basic salary? 30,000 per month into 12 months, and total will be 3,60,000. Let it be there. Now, what are the other things? He owns 2 houses, one of which have been let out to his employer. So, house 1 have been given to his employer, and which in turn is provided to him as a rent-free accommodation. So you tell me what to do with that. Think about this building. Think about this building. Say this is owned by me. This is owned by me. I have rented this building to my employer. I have rented this building to my employer, so that my employer is required to pay me a rent. Are you with me? Are you with me? And employer did one more thing. Employer, after taking it for rent, told me to stay here. Told me to what? Stay here. So I will say that I am getting dual benefit. From the same house I am getting dual benefit. 1, I am getting rent. Number 2, my house is occupied actually. It is rented out. Now I should take a house outside for rent. Yes or no? Because right now I have given my house property on rent to my employer. Now I should take a house outside on rent, but not required. The employer have given me the same house back as a rent-free accommodation. So dual benefit number 1, the rental income, the house property head, I have to treat it as a let out property to my employer. And treatment number 2, under salary, I have to compute RFA. Say, or if you are still confused, imagine like this. I've given this house on rent to my employer, and the employer have provided me some other house. My employer have given me some other house as a RFA. Then the rent that I'm getting from this property will be my rental income, and the benefit that I'm getting as a rent-free accommodation have to be valued under salary. Instead of giving another house, my employer told me to stay in this house itself. Are you with me? Are you with me? So 2 treatments are there, one under the head salary and number 2 under house property as a let out portion. Are you all with me? First let's finish the things under salary. Now you listen, fair rent, municipal value, everything is given. Municipal taxes, repair, insurance premium on building, ground rent, nature of occupation. 17,000 were paid as interest on loan taken by mortgaging house 1 for the construction of house 2. During the previous year 23-24, Mr. Madhavan purchased the rural agriculture land for 2,50,000 and stamp duty value is 3 lakh. Then determine the taxable income of Madhavan for assessment year 24-25. All workings should form part of your answer and main 19, 8 mark they have tested this. Okay, the mark weightage is around 8 mark. Maybe 4 mark for salary head and 4 mark for house property head. That I don't know. Simply guessed it. Okay, so 8 mark the weightages. Now you tell me, first of all, let's compute the rent-free accommodation. So RFA. How do you compute rent-free accommodation? How do you compute rent-free accommodation? Depends upon the type of employee you are. You are not a government employee, so don't even think about license fee. Now the house is not owned by the employer because you are the owner. Employer have taken that house on lease from you. Are you with me? So what you need to do, the house is actually taken on rent or lease. Now how to value? Either the rental amount paid by my employer or 15% till August, 10% thereafter. Do you remember yesterday? This has all the complication. Right now, this has all the complication. So let's value everything. We'll write a working note for this valuation, okay? That's why I selected this question because I love this question. It has all the permutation combination, all the possible complications it have. So listen. See, from the perspective of employer, has taken house 1 on rent. Yes? Yes. I didn't say it is owned by employer. Come again? Yesterday in the valuation, you were there yesterday in the classes? You have the handout with you? Turn the page and take RFA. அதுக்கப்புறம் இது படி, the B portion படி. அது with effect from when? 1st September 23 இல்லையா? Now அதுக்கப்புறம் main charted, அதுக்கப்புறம் இது படி. அதில் என்ன இருக்கு? Lower of 15 of the salary paid or rent payable by the employer. Combined interpret பண்ணினா என்ன பண்ணணும்? Till from 1st April till 31st August 15%. With effect from 1st September 23 till 31st March 24 10%. புரிஞ்சுதா? Yes. இது படிக்கணும், okay? Every day revision doesn't mean revision for me. It's revision for you, okay? So, listen, what we need to do is, where were we? I was writing this. Employer has taken house 1 on rent from employee and provided the same house as rent-free accommodation to employee. So, from 1st April 2023 to 31st August 2023, from 1st April 2023 till 31st August 2023, how many months are there? 5 months. For 5 months, how much is the rental income? Sorry, rental expenses by employer. How much is the monthly rent? What is the monthly rent for house 1? See, where is actual rent? Fair rent, actual rent, yeah. 65,000 is the actual rent. House 1 have been taken on rent by the employer. So house 1, actual rent means that actual rent is paid by employer to the employee. Yes or no? Yes or no? Don't mathematically search for the figures in the question. Okay, first you understand what exactly happened. Okay, employee have given his house 1 to the employer and he got actual rent as 65,000. Now, is it 65? Yes, 65,000. And now you tell me how much is the rent paid by the employer? 65,000 for the whole year. Now, for 5 months, how much will be the amount? 65,000 for the whole year into 5 by 12. How much is that? 27,083. All right. Now, how much is the salary for 5 months? Salary for 5 months for the employee. 30,000 into 5. That will be 1,50,000 into 15%. Because it is for the 5 months, it is 15. How much is 15%? 22,500. Pick whichever is lower. Which is the lower? 22,500. Now you have to compute for the rest 7 months. For the rest 7 months, rental expenses for the employer will be 65,000 divided by 12 into 7. How much is that? 37,917. Okay, 917. Now how about his salary? Salary will be 30,000 into 7 into 10%. That is a percentage. How much is that? 21,000. Whichever is lower means 21,000. You can do it together, okay, no problem. You can do it together also. Now, can you tell me how much is the taxable value of perquisite? 43,500 is the taxable value of perquisite. Are you all with me? Yeah, take a note of this, okay. This is the crux. Yes. So how much is the total RFA? 43,500. Now, can you tell me how much is the gross salary? Gross salary 4 lakh 3,500. From that you can deduct what? Standard deduction at 50,000. And how much is 50,000 standard deduction? 3 lakh 53,500. Now, we will compute the house property income now. House property. We will take house 1. It is let out. And we have house 2 also. That is also let out. House 1 let out. House 2 also let out. So we have, first of all, I am computing expected rent for house 1 and house 2. Let's compute the expected rent from the question itself. So house 1, how do you compute expected rent? You take the fair rent and compare it with the municipal value and pick the higher. Which is higher? 75,000. Is there any standard rent in the question? They are not mentioning any standard rent. So 75,000 itself is the expected rent. So we were taking 75,000 rupees as the expected rent. How about house 2? Fair rent and municipal value, you compare these two and pick the 1,95,000. So that will be the expected rent in house 2. How much is the actual rent, friends? Actual rent. First case 65,000 and second case 2,85,000. Whichever is higher shall be the GAV. How much is the GAV in case 1? GAV in case 1 will be 75,000 and case 2 will be 2,85,000. From that you can deduct what? Municipal taxes paid. Are they saying anything in relation to the municipal taxes? They are saying municipal taxes paid 18 and 70. So 18,000 and 70,000. 18,000 is there for house 1 and 70,000 is there for house 2. And can you tell me how much is the NAV now? 57,000 for house 1 and 2,15,000 for house 2. Now you compute standard deduction at 30%. And how much is 30% of 57,000? 17,100. 17,100. And how about house 2? 64,500 for house 2. Now, how about interest on loan? Are they saying anything in relation to the interest on loan? Yes. What they are saying is 17,000 was paid as interest on loan taken by mortgaging house 1 for construction of house 2. So you tell me, for which property you have taken loan? For which property have you taken a loan? House 2 by mortgaging house 1. What is mortgage? It's kind of a pledge. When you pledge immobile property, we used to say mortgage. So house 2 is the loan and interest is 17,000 and there is no ceiling limit since it is a let out property. For house 1 there is no interest. Can you tell me how much is the income from house property? Income from house property, first one 39,900 and second case 1,33,500. And now can you tell me how much is the total income from house property? Income from house property. 1,73,400. Now you need to compute both. That is 353,500 plus 1,73,500. How much is the total income of that person? 5,36,000, 26,900. This is the final answer. How many of you got right answers? Raise your hands. Very good. Excellent. Even though the question looks very simple, it's like you have to be very careful, otherwise you will easily go wrong. RFA, okay. Rent-free accommodation. Listen, I'll explain that again. Listen. Shh. Sri, rent-free accommodation, yesterday what we have learned is, we have learned one chart as well as one amendment. Okay. So, sir, can we take like computing the whole hire charge and compute the hire charge separately for 10 and 15 and add them together and compare it? Yeah. That also you can do because there is no instruction from income tax department that you have to do it separately. That also is fine. Ashwin, you can do that, no problem. Okay. Institute itself is not explaining, like they haven't given with a criteria. They haven't came up with a criteria till now. So it's up to you. But you have to do that, that's it. For the 5 months, it should be 15% and for the remaining 7, it should be 10%. Yes. Either together or two separate computation you can do, no problem. Yeah. So listen, the RFA thing here, listen. The RFA thing here is, see, the house property that the employee had, he have given it on rent to, say, imagine some other person. Okay, he have given that property as a rented property to some other person. He had 2 properties and both of the properties have given as rent to some other person. And this employer have given him some other property as a rent-free accommodation. Then what will you do? Say, I am an employee. I had two properties. One this and one a nearby building. I have given both the properties on rent. Then both the properties are let out property. And for me, I should have a house. I should take a house on rent because my both owned houses are on rent. Now I should take a house on rent. But my employer said, don't worry, you stay in another property. Because my employer has given me another property. Similarly, one of my property have been given to the employer and the employer in turn given it back to me. Are you with me? Yeah, the treatment is same. If it is outside or if it is to the employer. I hope it is clear now. Irukku ana illaya. Veedu irukku ana illa. Nothing. Oh, you are saying this answer. I thought you are giving me some. Sir, what about rural agri land? Yeah, I forgot about that. Listen, rural agriculture land that you will learn in IFOS, okay? Rural agri land if you purchase, that's actually a purchase. It's not at all a sale. So rural agri land for the purchase, you have to do nothing. Okay, you can simply ignore that. You are purchasing a rural agri land, there is no income tax implication for that. Completed? Is there anybody who's still writing the sum? Yeah, complete. Online also, please complete. Mortgage interest, that's nalla padi Ali Nawaz. The mortgage interest illa. You have mortgaged house property 1. For what? For taken a loan for the construction of house property 2. So you have taken a loan for house property 2. That's why we have claimed that 70,000, not 70,000, what is the interest? 17,000 as the deduction, okay? Okay. Yes. And he will not get rental income also. Okay. You're thinking from another perspective. Yeah. But for that, he should come to us initially. But 99% people will do everything. Then only for filing return only they will come to us. The question dana. This is created only for testing you. That's it. And first of all, no person will rent out both the properties to someone else because I have to be in the street. Okay. So the one if I'm mortgage house property 1 and doing repair in house property 1, even this case also we can deduct up to 30, yes, if it is self-occupied. But this is basically let out property, so there is no ceiling limit, okay. This is actually let out property, so there is no ceiling limit. If it is self-occupied property, there will be a limit, yeah. Yeah, friends, so can you read this question? Can you read this question and give me the answer? It's a fantastic question, okay? It is not there in the question sheet. It's not a past exam question. If I'm not wrong, it will be either MTP or it will be your study material question, okay? What are they saying? Two brothers, Arun and Bimal, are co-owners of a property. Okay, Arun and Bimal is there. Both are co-owners of a property. Shh, keep quiet and listen. With equal share, the property was constructed during the financial year 98-99. So 2-3 things are there. Number one, the construction is in 98-99 and the property is a co-owned property. The property consists of 8 identical units and it's situated at Kochi. So say, imagine this is the property. Okay. How many units it have? 1, 2, 3, 4, 5, 6, 7 and one more thing, that is 8. So it have 8 units. Okay. These are identical units. Now, during the financial year 23-24, each co-owner occupied 1 unit for residence and the balance of 6 units were let out at the rent of 12,000 per month. So, say Arun occupied 1 property. Occupied means for self-occupation. And Bimal also occupied 1 property and the remaining 6 have been let out. Are you with me? So, the remaining 6 have been let out. Then, what's next? The municipal value of the house is given and the remaining 6 have been let out at 12,000 per month per unit. What do you mean by 12,000 per month per unit? What do you mean by 12,000 per month per unit? Each one property will get in a month rupees 12,000. Okay. Now, the municipal value of the house, the entire house municipal value is given 9 lakh and the municipal taxes for the entire property it is 20,000, 20% of the municipal value, which were paid during the year. And the other expenses are follows. Other expenses are also given. Repair is there, insurance premium is there, interest payable on loan taken for construction of house is there. One of the let out units remained vacant for 4 months during the year. Now there is a problem. What is the problem? See, out of the 6, 1 is vacant for how many days? How many months? 4 months. Is it Arun's property or Bimal's property? The vacant, is it Arun's property or Bimal's property? That we don't know because the question has not specified. So they will not have a specific ownership. It will be like a common. Exactly. So what you need to do is you compute the income from 6 units, then you split it between Arun and Bimal. Are you with me? First you compute the income from the 6 units, then you split it between Arun and Bimal. That is the only way that we can solve this question. Why? Because each owner's specific share in that particular unit is not mentioned in the question. Are you with me? Are you with me? So, if you get stuck with something, then always think in a different way. If in exam, if you get stuck with something, always think in a different way. Are you with me? So, Arun could not occupy his unit for 6 months. So, it is unoccupied property as he transferred to Chennai. No problem. So, he does not own any other house. So, the other income of Arun and Bimal were 290 and 180 respectively for the financial year 23-24. Compute the income under the head income from house property and the total income of total income of 2 brothers for assessment year 24-25. So, we will do it together. First of all, let's finish off the 6 let out units effect. Okay. So, listen. So, computation of income of 6 let out units. Let's compute that first. So you tell me, do you have fair rent in this question? Are they mentioning fair rent in this question? No. Do you have municipal value? Yes. So you take the municipal value first. Municipal value of the total property is how much? 9 lakhs. Now, is there any standard rent in the question? Is there any standard rent? No. So the expected rent of the whole property will be 9 lakh only. Are you with me? So municipal value will be the expected rent. But how much is the expected rent of let out portion? Let out portion. This expected rent is for the entire property. Yes or no? So 9 lakh into 6 by 8. How much it will be? Why the 6 by 8? Out of 8 units, 6 units let out. So expected rent of let out units will be 9 lakh into 6 by 8. And can you help me with the math? 6 lakh 75,000. Now, how much is the actual rent? Actual rent will be for 5 units you received 12,000, right? 12,000 rupees per month into 12 months. And for 1 unit, you received 12,000 rupees only for 8 months because there was a 4-month vacancy for 1 unit. Now, can you help me with the math? How much is the total of this? Total 8 lakh 16,000. Are you all with me? So whichever is higher, which is higher? 8 lakh 16. So you tell me how much is the GAV? 8 lakh 16,000. Now, can you claim municipal taxes as a deduction? Yes, but not full, only for that 6 by 8 portion. So 9 lakh into, I think, 20%, right? 20% into 6 by 8, and can you help me with the math? 1,35,000 rupees will be the municipal taxes paid. And how much is the NAV? NAV will be 6 lakh 81. 6 lakh 81,000 will be the net annual value. Are you all with me? From that you can claim standard deduction at 30%. How much will be standard deduction of 8 lakh 31? 2 lakh 4,300. Is there any interest on loan? Yes. Interest on loan in total. How much is the total interest on loan? Total interest on loan is 3 lakh into 6 by 8. How much is the interest on for let out portion? 2 lakh 25,000. Now how much is the total income of the let out to 6 units? 2 lakh 51,700. Now this have to be splitted among Arun and Bimal. Are you all here? Now we will change our computation method. We will consider Arun and Bimal. So Arun and Bimal. Now for Arun there is let out portion and self-occupied portion. Let out portion is there. Self-occupied portion is there. For Bimal also, let out is there. Self-occupied portion is there. First we will compute the self-occupied portion. Okay. As you all know, NAV of self-occupied portion is nil. The only one deduction that you will get is interest on loan. How much is the interest on loan for Arun? See. Total interest was 3 lakh. Out of that, 225 is for the let out portion. So the remaining is 75. That 75 have to be divided between Arun and Bimal. Are you with me? Are you with me? Say, listen, the total interest is 3 lakh. Okay, 3 lakh was the total interest. Out of that, 225 we have taken for what? Let out portion. So the remaining will be 75 for the self-occupied, and this have to be divided between Arun and Bimal. How much is 75 divided by 2? 37,500 between Arun and Bimal, but you only will get how much? 30,000. Why 30,000? Because the construction of the property began in 98-99. You require a loan at the time of construction only. Are you with me? After 10 or 15 years of construction, will I take a loan for the property? No. So what we need to do is we need to restrict it to 30-30 each. So interest on loan here will be 30, and in the other case will be also 30. Now this will be loss 30, and the other case it is income that we have already computed. How much is that? 251,700 by 2. 1,25,850. That is for the let out portion. Here 1,25,850, and this will be loss of 30. Can you net off and tell me how much will be the amount? If you net off these two, how much will be the amount? For Arun it will be 95,850, and Bimal also 95,850. Now note over here, they have other incomes also. This is from house property. And what are the other incomes? Arun have 2,90,000 rupees as other income, and Bimal have 1,80,000 rupees as other income. And can you help me with the total income computation? 3,85,850. And how about Bimal? 2,75,850. This is the final answer. Are you all with me? So please complete the answer. We have type.
To purchase recorded lectures and textbooks, visit our website www.cajoskurian.com.